Good morning, everyone. Welcome to our Thursday morning trading session. Just 1 second here. Okay, should be able to see my screen. Market just opened up, and I think we actually opened with a little bit of a gap lower. Just make some adjustments here to the Raptor. We'll go over, and I think we're going to see that from where we left off yesterday. Where are we? Right about here. Asian session declined a little bit and kind of stayed down there through the London session. A little bit choppy, actually. So this is where we're at. Tiny little opening gap. Well, not that tiny, I suppose. And as has been the habit of the NASDAQ lately, we're seeing a lot of sideways action. I think that's because of the resistance that we're getting near on the daily chart. Let me build you a daily chart here real quick, and you'll see exactly what I'm talking about. So if you shoot a trend line across the daily, you can see that we're awfully close to finding some resistance. And I think that could be a little bit of a tipping point. We'll see how far along they get. Right now, obviously, heading a little bit lower. Or I suppose just trying to sort themselves out a little bit. We'll give them a few minutes here to get their bearings. All right, we did get a green bar sell here, which I don't know if I want to commit to a buy just yet. What time is it? Oh, we're about 5 minutes into the session. It's still very, very early. A green bar sell, you know what? I'm going to let it go. It very well could head lower, find its profit objective. We haven't seen a real test of the extreme here yet. I was tempted to set up to buy the failure. That's what I was looking at. But all those yellow bars here are kind of hovering at the same latitude. That's not filling me with a whole lot of confidence right now. A lot of chop. Yeah, you see they just keep on waffling. That green bar sell did work out. It did send the market a little bit lower. Now we're actually getting a hard edge sell here on the Eagle. Now this one, even though it's still very early, I might give that a try. Oh. Only because we've had this test at the extreme, we've had a rule of three type setup here. If we can get below the low right here, I think we're going to see it run a little bit. There we go. The Eagle, again, one of those tools that I'll trust it with an early signal. It just seems like the Eagle Trend Trader a little bit more sensitive to what might be going on. Come on, get going. There you go. So this bar with this wick on here is a pretty good one to cover above in case they decide to come up short of their profit objective. Oh, come on, you. Stop looking back. No. Oh well. At least took a little bit of profit out of that trade. We had a comparable signal here on the hawk, as you can see, a first micro macro cross signal. Look at the width of these bars that we've got going on here. Definite area of interest for the buyers and sellers. So a little bit of a sideways channel. The Raptor and the Falcon both starting to get a little bit more aggressive here. I'm going to look for a buy signal to come out of the Raptor. This would be a soft edge buy. We've already got our little bit of a swing point here. This again getting a little bit more aggressive. Actually, I'm not going to get too crazy with that just yet. We've actually got another macro pullback signal here. And you can see the signal's getting a little bit conflicting again, where now we're generating a buy dot on the eagle. The Raptors had a little test of the extreme. Falcon's starting to get a little bit more bullish. Oh, here we go. The hawk now into yellow bars. 1, 2, 3. That's actually going to be a 4-arrow consolidation, which is the only signal I'll take on the hawk off of a yellow bar. The problem here is where to cover this trade. Oops. Oh, come back. Oh, shoot. They're not going to give me a chance. All right. It may turn out to be a good thing. We'll see here in a moment. So you see what we have going on here is we get this whole test retest thing going on. That's why I was considering shorting it again. And we had 1, 2, 3, 4 signals. So this is technically a 4-arrow consolidation. You can see we're getting a little bit of heat now turning into a green bar sell. And now all that's out the window. Still working on this retest though, right? We've broken down this way. We're retesting. Here come the sellers. They're trying to regain the market. And this also looks a little bit like a bearish flag. No, it's totally breaking down. If you were here and you didn't roll your stop from up here to down here, certainly this bar right here is going to be the last chance, I think, that the sellers have to get their act together. So they came up short on our Eagle trade. Didn't follow through on that 4-arrow consolidation, which tends to be a pretty strong signal for the most part. Let's see if we can't get a first micro macro cross higher. nuts. So this is a little bit unusual that we didn't get a first micro macro cross here where this green bar sell failed. Right, so there's the green bar sell. And as you know, with the green bar sell, we can set it up to take it with trend, or we can set up for the failure of it. Very often setting up for the failure is an easier way to go because these tend to develop near trend changes, so you can risk the trade relatively deep and you can see no problem getting to your profit objective there. Here we are back where we started the day. So just swinging a little bit back and forth, no real follow through at the moment. You can see we're currently in scalp mode, but only for a minute. And then we're into trend mode. I sure hope so. That according to the trade forecaster. Soybeans dead quiet this morning. Crude oil put in a little bit of a rally out of the open, but pretty quiet since. We've got a, darn it, we got a green bar sell, a macro pullback. Okay, well that just failed. The macro pullback just went into yellow bars, so that's okay. Getting such a variety of signals here this morning. Ay, 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 what a mess. A possible trend change signal here, it would be an early trend change signal. Everything is unfolding rather quickly and not very neatly. We did have a test of the extreme. You can see that's fairly obvious here on the Falcon and the Raptor, both of which giving us a chance at a second push on the entry. I'd probably take it below the lows, cover it like this. Ditto for the Raptor. Now we're getting a first micro macro cross also here on the Hawk, so maybe a little bit more in sync than what it has been. I wasn't real impressed by the lack of follow through from the first signal that we had on the Eagle. You know, the market found some serious support here on the lows. The Hawk should be able to find that profit objective. So I suppose a little bit more in sync. The big problem now is riding out the swing, of course. We're doing the whole test retest thing once again. Hey, they're not playing nice today. Nope. They're going to come up here and give me a spank in just a moment. Well, it's that type of day. You know, all these yellow bars, all the lack of the follow through. That first micro macro cross should have had more follow through to it. So what I do when I take a signal like that, when I take a first micro macro cross and it doesn't have the follow through to it, if I take another high probability signal, like for instance, we're working on another first micro macro cross here. Everything is just in sync now. The signal actually developed while the macro line was still out of sync. Pardon me. So it's the next signal that I'm going to be interested in. All right, so here we go. Here's the first micro macro cross now. Now it failed to the downside. If it fails to the upside as well, then I definitely know there's something funky going on with the market today. You can see I'm giving it plenty of room. What I'm going to do too is I'm going to see if I can't turn this one into a little bit of a runner. Nope, now we're into yellow bars. So not much fun so far today. Oh, thanks, Jim. Jim's giving me some advanced decline numbers here. Pretty much even up. 1310 on the buy and just under 1400 on the sell. So as far as advanced decline numbers go, that's pretty much dead even. And until they get outside of this trading range that they've established, don't expect any decent signals. It's going to be more of the same, more of this choppiness, more of these whipsaw type signals. Possible late filter entry signal working here on the Falcon, also slash trend change signal. You can just see how messy everything is. Nope, not going to give it to us. Not yet, anyway. This is reminiscent of the summertime where we had to run some really big stops to ride out the choppy trading that we were encountering. Yeah, and Tony, I think you got the right idea. Tony says just bracket the range Go take the dog for a walk. So here's the high, here's the low. It's not a bad strategy, folks. You can see, look at this is our median line. We're just skewered right on that median line. Good question here from Marlene. It's nice to see you in the room again, Marlene. Marlene asks, hi, Eric, would you look at another chart if the NQ is so choppy on a given day? Yes. I'm also watching soybeans and crude oil, neither of which are doing very much. I also know that the NQ is going to make a move sometime today. It's kind of a matter of waiting it out. That's why Tony suggested we bracket it and just let it break out, and then we'll trade the breakout side. See, a lot of times when you open up your chart and it looks like this, you just kind of resign yourself to the fact that the market's going to be choppy for a little while. It may take most of the morning to sort itself out. You see, we haven't really drifted very far from where we began. So this tells me that the NASDAQ is very content to be trading around 4,300, 4,305. It's very satisfied with those numbers. There's no real imbalance here. Any of the other stock markets you're going to be looking at, though, are going to be the same. So you're going to need to look at something totally unrelated, perhaps like crude or gold, or perhaps one of the currencies. Actually, why don't I do that? I'll put the British pound up because soybeans are just dead quiet this morning. The British pound did put in a nice rally, or sorry, a little bit of a rally in the overnight here, and then a nice little decline here on a trend change signal to the downside. Now they're looking to perhaps retrace back to the hard edge, but overall no real signal there either. I'll leave that up though. I'll leave the British pound up today. Okay, our range is getting a little bit tighter. You can see here, here we can do an OCO order on the Eagle. So we're getting a lot tighter on our range now. If we did want to do an OCO order, it could look something like this. Our filter not really giving us a clue either who's getting stronger and who's getting weaker. Like everything is just so even. Sellers had control here, buyers come back with a big block. Sellers are kind of winding down. Oh, buyers are weaker. Oh, sellers are getting stronger. No, buyers are getting stronger. No, sellers are getting stronger. It's like they're just stuck. And you can see how flat everything is becoming. Not a recommended trade, folks. We're just kind of doing this OCO thing for something to do. I personally, I think we're going to see the market try to recover and get into that gap from this morning, which would put it probably near the high here, somewhere around 43.14. That's what seems most plausible to me right now, but you know, no decent signal. You can see again all yellow bars through here. Our Falcon trend line just keeps waffling. The filter keeps flip-flopping. Oh, the Russell made a new high of the day, Jim says. Thank you. And the advanced decline still dead even, so you can see the result of that. So, nothing going on. All right, so here they come. They're going to try to hit the top end of the trading range where we have our OCO order. Let's see if we have any follow through on it this time. Come on, you can do it. Oh, man, brutal. You could also bracket the larger range, pretty much the range that you see here for the first hour. So you could buy above 43.10, you could sell below 42.92. That's really the big range, right? This is where the sellers dug in, this is where the buyers dug in, and you can see we're pretty much just waffling in the middle of all that right now. Now a first micro macro cross signal. Again, not the best signal. It might be worth giving it a go though, just because we're at the top end of this trading range. The buyers are showing a little bit of interest here. It might be worth, taking a small risk trade on it, and now we're into yellow bars, so that again nixes that. And I guess I better get a stop loss order in play here. Yeah, stop that. Get down there. All right, well, we'll set that aside for now. Now we're getting a first micro macro cross lower. Well, I wish there was more that, we could do, a little bit more structure, but it's one thing about trading. You cannot make the market do anything. And the moment you try, that's when you're going to get handed a spanking. Well, let's go take a look at that. Yeah, Paco says it's choppier than in a slaughterhouse. Yeah, that's exactly what it is, though. It is a slaughterhouse today. Just grinding traders, churning them. Marlene says there was a nice trade in gold, so I'm just going to load gold up. Oh, yes. Several nice opportunities here on gold, but probably the best one, I know Marlene was watching the Eagle, but right here on the Falcon, a nice trend change signal that occurred right here followed on the heels by a late filter entry signal. So that's a pretty high probability signal right there. And then very strong move right from the primary, through the primary support, went two zones right to the primary resistance. I see. Marlene said she took Mike Filigueira's trade with the signal in sync with the ATR here on the Eagle. So right here, I think Marlene got in. Well done. Yeah, great follow through on that one. Gold's a nice market to trade also. When it decides to move, it can offer you some very good moves. Okay, now we're back at the bottom end of the larger trading range. And you can tell from the width of the bars here, all the buying coming back in at the bottom here too. See on the Falcon and the Hawk also. If we ever manage to get outside of this range, Tony says, scoundrels, he says. I'm going to the corner to sit on my hands. Yeah, on a day like today, really, you have to let the market get outside of this initial range. Like I said, anything within this range, you're just kind of asking for it. This is what happened yesterday, too. This started drifting lower, made a rather substantial move to the downside, and then recovered toward the end of the session. Okay, well, at least they're outside of the trading range now. That's a bonus. Just encountered our primary support line here on the Falcon. Well, I really wish there was more that I could show you right now, but there's not. All right, well, I'm kind of debating here this macro pullback signal. Took a little bit of a bounce. We're back in this whole retest territory. Still not the strongest of signals. Okay, here Marlene's got a question. Now we're actually into a slightly better signal here on the NASDAQ, where we have a green bar sell, and we haven't had a test of the extreme yet. So this is one of these signals again where you could look to take it this way, or you could set up to buy the failure. Now either way, it's a little bit dicey today, as you've seen. I'll set up to buy the failure in anticipation of a little bit of a move higher. But Marlene is asking of a Falcon change here on gold. Okay, so Marlene is asking, I think Marlene is asking, would I have taken this signal here? Oh, it was at 1018. Yeah, so that's this signal right here, I believe. No, because that's not a full trend change signal. The trend change signal begins with the trend line changing color. Okay, so we have our trend line changing color. We have the push that changes the trend line color. Then we have to wait for the counter push. So in this case, the buyers push the market up, changes the trend line from red to green. Then we want to see where the sellers are at. So the sellers come back, they try to push the market back down, and then the buyers come back with their buy signal. This here is our trend change signal. Let's look at another one. That one's a little bit too far. Let's get you something that's a little bit more textbook. Well, here's one. So the trend line changes color from red to green. There's the up. Here's the down. Here's the up. This is the trend change signal. This one is rather big, but here's the down, the trend line changes color. Here's the up, they only came up for one bar, and then here's the down. This is our trend change signal. Now we also have what is called the early trend change signal, and that one develops just as the trend line changes color. It's not as reliable as the full trend change signal, but you can take it if you've had this test of the extreme first. If you've had this little, in this case, down, up, down pattern and the signal. Here's another one. Down, up, down. And notice how the second down is lower in height than the first one. That's very important. So here's a trend change signal that occurred just as the trend line was changing over. Now, I do tend to prefer to take that trend change signal as early as possible. I would not have been too keen on taking this one here, even though it looks like it did work out. Once they drift a long ways, it becomes a little bit more difficult to take advantage of it. Here's another trend change signal. This one's almost a blending of the two, of the early and the proper one. So here's the up, here's the down. Notice the test of the extreme, it doesn't get as low. Here is the up, there is our signal. Here's a good trend change signal to the downside. Here's the down, here's the up, and then here's the down. Now you took a little bit of heat on this trade, but it eventually fell off. Here's another, this one's practically textbook. Here's the up, trend line changes color. Here's the down, here's the up. So there's the signal right there. So compare that to what we have currently. Well, this, yes, we generated a sell signal, but that's not a signal that I would be interested in. There's not enough structure to that trade just yet. Marlene asked, what are your tick sizes on gold? I go with the default bar sizes, so that would be a 6-tick hawk, an 8-tick falcon, and either a 10 or 12-tick eagle. Now, people are always asking, well, can I do smaller tick sizes? Sure you can. Just be aware that the smaller brick size is you're going to generate more signals, and more is not necessarily better. You're going to produce more signals, but as you produce more signals, there's also the chance that one of them will be a false signal. So Marlene is asking, why not a 446 setting on gold? Well, the 446 setting, okay. The 446 setting is reserved for those markets that don't respond well to the traditional brick size. Typically, those markets tend to be markets that trade at 1250 a tick or more. Well, there's really only one, I think, that trades at more, unless you go into the big Dow and the big S&P, and that would be the 30-year bond. But the E-mini S&P is the most notable one. And I'm going to show you what it looks like on the regular bar, or the regular tick size. Okay, so here's an 8-tick brick on the Falcon with the E-mini. Oh, actually, yesterday was pretty good. As was the day before wasn't bad. The E-mini is going to spoil my example here. What tends to happen with the E-mini is that you get sessions that look like this. Come on, there we go. You get sessions that end up looking like this, where you say, well, you know, this is supposed to be my swing trader. I'm not getting any trades, right? If this is midnight to midnight, there's hardly any signals there, and from here to here. So this is what typically happens on some markets that trade at 1250 a tick, the E-mini being the most popular. You'll also see this problem with some of the grain markets, where the daybreak lines are just too close together with the regular brick size. Let me put soybeans up here. Soybeans will actually be a better example because they've been, see, here's soybeans on the regular 8-tick brick. Well, that's okay if you're going to hold overnight, right? Like, we're still generating signals. There's still a trend change signal here. It took a day and a bit to produce. But unless you're prepared to hold overnight, or you know, if you're going to use it as a day trading system, this brick size isn't going to do it for you. So when your charts look like this is when you need to go to the alternate setting, to the 446, so that you can actually produce a signal or two. But gold is not like that. Gold does just fine on the stock setting. You'll see that there's lots of activity. So here's gold at midnight. You can see we can roll it over. So there's the next day. Roll it over, and there's the next day. So you get lots of signals here, or enough signals anyhow. So there's no real reason to move into the 446 setting, unlike soybeans. So let me show you now the soybean on the 446 setting. So this is going to be soybeans on the Falcon. And it's still kind of tight, but you know, at least we get a few signals through there compared to what we saw on the 8-tick brick. Here's the day before, and once again, at least you get a couple of signals. Soybeans being abnormally quiet lately. Right, so that's why we go to the 446. Now, some people, I actually just got an email from a fellow the other day saying he likes trading a 4-tick brick instead of the default size. That's fine. Go ahead. If that's what you're seeing, if that's what you're used to, then go with it. But if you're asking why don't we use a 446 setting on gold, it's because we get plenty of signals with the stock setting, with the default setting. Oh, well done, Paco. Paco grabbed a little trade here on the Raptor, had a hard edge pullback at 42.88 3/4. Yes, sir, you certainly did. And you took it with a stop to the previous swing high and grabbed a 10-tick profit. Well done. Yeah, you know what? You walk away with anything today, you're doing well, because this is just a bizarre kind of day. Jim says the NQ is lagging big time. That's not like the NQ. Usually they're right up there in the mix. Good question here from Marlene. How do you decide if you should take a trade against the trend on the shorter time frames? So if you're asking if I'm running a 446 setting on something like gold, just 1 second, I'll load that up. How do I know if I should take a counter trend trade? Well, you should probably never take a counter trend trade. And let me bring this over here. If you have a well-defined trend, and I get people emailing me this all the time. Okay, we'll just ignore the brick size right now because this will happen on any brick size. I'll get people emailing me saying, well, Eric, we had a trend change signal right here. How come it didn't work out? You know, how come the market went up and stopped me out? Well, it stopped you out because you totally ignored the big trend that led up to it. The signals are not, you can't take the signals in a vacuum. This is why it's so difficult to produce a reliable black box system. People are always asking, when is Indicator Warehouse going to make a black box system? Well, here is the problem. The black box, how do you program the black box to recognize a trend? Right? Like, as human beings, we can look at this and we can say, yeah, okay, that's pretty substantial. The market just moved 3 zones straight up. That's significant. Maybe I'll be a little bit more cautious on the counter trend signal. A computer looks at this and a computer only analyzes values, right? If the parameters that we set for a trend are 1 tick too low, the computer will not recognize this as a trend, and it will say, yeah, go ahead, take the counter trend signal, or take the sell signal that's developing right here. So when you get a signal developing like this against a market that has just made a big move like this, that's not to say you can't take the signal, but perhaps you should exercise a little more caution. Maybe you should dial down the risk amount and maybe take the trade like that. Or if you can't afford it, maybe you just need to leave it alone. Or, let's see, what is it going to cost me? Or you just resign yourself to the fact that, okay, if I'm wrong about this, I'm going to take a $200 hit. Now, with gold, I do tend to double the profit objective because it is a more volatile market. If I go with my normal profit objective, it's going to make things a little bit easier also. In fact, did I hit it? No, not yet. So to answer your question, Marlene, how do you know when to take a counter trend signal? When I've had the test of the extreme. So the market comes down, the market goes up, tries to recapture the highs, and then reverses. Then I know it's safe to take a counter trend signal. Because consider what's going on here. We have just had the buyers put in a big rally. This is where the sellers drew the line. They said, you're not getting any more than whatever that is. We'll say 1146.50. So now, do you think that the sellers are going to be able to turn the market on a dime and, shoot it lower? Here, let's go back to our trend change signal, which occurs right here. How feasible do you think it is that the sellers are going to be able to take the market and just push it straight lower? Probably not very likely. Why? Well, because look at what the buyers just did. Do you think the buyers are just going to walk away because some sellers showed up? No, the buyers had good reason to buy the market and press it as high as they did. Now, we may or may not know what those reasons are, and they're really not all that important. The fact is that the buyers put in a really strong rally here. So it's unlikely that they're going to turn away entirely just because the sellers show up. This is what makes counter trend trades so dangerous until we've had that little test of the extreme. That little test of the extreme tells us, okay, here come the sellers, and the buyers say, oh, no, you don't. And then all of a sudden, the sellers step up early. Because what should have happened when the buyers took control of the market is the buyers would have said, oh, no, you don't, and they continued to rally the market higher. But when we have that test of the extreme, all of a sudden sellers show up early and they say, oh, no, we're here, we're not walking away, and now they start to put some pressure on the buyers. Now, how low will they be able to go? Well, that's anybody's guess. If you're a Fibonacci trader, you're pulling out your fib ruler and you're saying, oh, we're going to get a 50% retracement, or we might get a 62% retracement. But does that really matter? Isn't it more important just to know the direction, whether you get a 50% or a 62% or a 66 or whatever? I don't think it really matters. I think I'm just more interested in knowing who is in control of the market and where it's most likely to go. And this test of the extreme tells me that, yeah, okay, the buyers are strong enough, the sellers are strong enough that they're going to put some pressure on the buyers, and I can probably anticipate for the short term at least a little bit of a move lower. Because don't forget, the lower this market gets, the more enticed the buyers will be to buy back in, because whatever reason they had to rally the market from back here, it probably still exists. And so they would try to, once again, rally the market up. Now, what tends to happen is in a strong trend or in a healthy trend, this rally point comes early. The smart buyers, the buyers who bought in early, are not likely to let the weaker buyers or the guys who show up late buy in at the same price that they did. And likewise, the people who miss this initial move are going to be anxious, right? They're going to not want to miss the move again. So when the market gets back down here to whatever retracement point and they see some buying support, they're going to throw their hat in the ring too, and they're going to try to buy the market up again, hoping that the buyers will rally it once more. But once again, as we get a little bit higher, all of a sudden the sellers are going to get a little bit more interested. And this is why things like trend lines and such tend to hold some influence over the market, because buyers and sellers are looking for probable places where they can enter the market. So when we see the market trade back up to a trend line, we think, oh, okay, the sellers are going to get active. And if you're bearish on the market, regardless of what your reason might be, okay, you throw your hat in and you start selling. And if you're correct, then the market will head lower. And if you're wrong, well, the market will head higher and you'll get stopped out. This is why the equivolume bars are kind of handy also, because they will help you see visually, well, not that you're going to see any other way, but help you see where the areas of interest are. So I can tell you the width of this bar right here, there's a substantial amount of interest in this 1145 area. I can't tell you right now whether the buyers or the sellers are more interested, but I can tell you there was a lot of volume, a lot of contracts changed hands in this particular bar. So if I see, usually at turning points, you want to see heavier volume. And let me condense this just to emphasize the point a little bit. Okay, so you see how the market came up, a lot of activity here, but the market didn't go anywhere after that. Volume, you've heard it said volume precedes price. So if you have a lot of volume, if you have a fat bar, or if you're watching your volume bars underneath, if you see a volume spike and then the market doesn't go anywhere, that tells you that there was a lot of activity there between the buyers and the sellers. So the buyers obviously trying to force the market up, the sellers obviously trying to force the market down, but the market didn't go anywhere after that. So it comes back, hits this level again, and then it eventually fails and heads lower. And look at what happens. We get another area where there's a lot of activity. So we know once these bars get wide, or if you're watching your volume on your chart, once the volume increases, you've got an area of peculiar interest. So there's a lot of activity going on in this market right now. The buyers trying to force it up, the sellers trying to push it down. It's hard to say whether we've had a proper test of the extreme yet. I haven't really seen the buyers try to push the market up at all. You would think after this rally here, they would be a little bit more anxious to get the market going again. Come on, let's go. Let's get this party started. But that's what you want to look for, Marlene, if you're considering a reversal signal against a dominant trend. And I do tend to reduce my risk exposure as much as I can. If I can afford it, I'll dial it down to 1% or maybe 1.5%, and try to limit my exposure that way. But it's an excellent question. A lot of times, I think you may have heard me say too, if I have a trade that is paid off in one direction, so for instance, if I start the day and I get a good buy signal and I buy the market and the trade was successful, I will make a note of that and I'll tend to be more bullish that day, unless I have a very good reason for changing my bias and going bearish. I thought for sure we were going to see the market try to get into that gap from this morning, but apparently not. Speaking of counter trend trades here, yes, Jim has been watching the width of the Raptor cloud here for counter trend opportunities. The cloud essentially shows you overbought or oversold situations. So when the cloud gets extremely wide, we tend to get a situation, in this case, a situation where the market is oversold, and then we're likely to see a little bit of a correction. But here too, see, we're looking for this little test of the extreme, right? There's our low. Here's our first clue that there's going to be a failure and the market move higher, this bar right here. See, here's another one. So the cloud starts to get a little bit wide. Stop it. There's our failure point, and then we get the retracement. Now this one did not retrace as dramatically as some of the other ones, but the principle remains the same. It did end up going to the hard edge, which is still fairly substantial on its own. See, before you get that test of the extreme, you're not going to get a reversal. Well, all right, this one made a little bit of a liar out of me. Itty bitty test of the extreme right here. Very difficult to spot. Easier to see in hindsight, but 99.99% of the time, a test of the extreme precedes the reversal. Oh, stupid computer. Here we get two tests of the extremes, right? And then the market continues to break down, and look at the follow through. Once we see that the sellers truly have control, look at what happens to the marketplace. The hardest part is waiting, right? We're all anxious. We're all wanting to make money now. But sometimes the hardest thing is waiting for the structure to actually develop so that we can take a trade. And it repeats time and again, over and over and over again. Oh, wow, Jim did all right today. He says it's a chop fest, but he took 3 trades. He's up 68 points. Well done. That is nothing to sneeze at, my friend. Good job. Like I said, you take anything out of the market today, you're doing okay. But that volume is always handy, right, to help identify where those turning points may occur. But a difficult day today, no question about it. So, and it doesn't look like it's going to ease up any. I would have thought that the market would have shaken loose by now, but not yet. We've still got that gap above us. I'm quite surprised the market didn't try to get into that gap earlier, but they still might. But yeah, it's been a difficult session so far. Good questions, though. Thank you for your questions. At least it helps pass the time a little bit. Well, now they're going to come back and retest this upper end of the trading range before they, well, I want to suggest that they're going to continue lower today, but it's obvious that we have support on the bottom end now. It's pretty obvious on the Raptor. We got loads of support right here. Now they're going to go retest this area right through here. Oops. The afternoon is actually likely to shake things up a little bit. If you are trading this afternoon, I think you need to be aware of this gap that's still hovering up here around 43.13 or 43.14. That would be that opening range gap. So if we do see a reversal and get outside of this range to the upside, what we want to see is we want to see a breakout. We want to see the buyers hold the breakout, and then we could see a retracement and get into that gap from this morning. That looks like it might be the most plausible, but I'm really kind of just reaching here because there's not any real structure to the market this morning. It's, like I said, just very happy to be in this whole 4,300 range. All right, you guys, I think we're going to button up the room today. Tomorrow should shake things up a little bit. Fridays normally do. And hopefully we'll be able to find ourselves a couple of good trades then. Talk to you tomorrow. Bye for now.